Hello guys, it's Max here from Daily Market Movements. Today it is the 31st of October 2021. It is a Sunday. We are on the cusp of a brand new trading week. I'm very excited this time around because we are going into the month of November. Now, for those who watched my video that I posted yesterday on Saturday where I concluded last week's price movements, I shared the fact that, going into November, especially December and January, it's typically speaking a very bullish time for the markets. If you was in my signal group this time last year, you will know we made a significant amount of profit this time last year. So, this time of the year, this period is very bullish all the way through until the end of January. So just before we start today's video, if you would like to receive my trades from a day-to-day basis, then head over to my website, dailymarketmovements.com. I charge a very small fee of £249 for you to join my signal group. It's over on WhatsApp. I've left the website link in the description of this video. But if you just want to continue to watch my YouTube videos, which I post on a Sunday night, Wednesday, and on a Friday, then that's absolutely fine. So let's start today's video analyzing the gold over the US dollar markets. Gold, as I mentioned on the Friday video, it really struggled on a Friday. We broke down from that 200-day EMA. We were trading as high as 1808 on Friday, and we broke below that 200-day EMA, and we went all the way to the 50-day EMA. And in fact, for a short period of time, we did actually break down lower to go and test the fib level, which was down at 1771. We did bounce back, which was very positive. And the most positive thing about the gold movement on Friday is that the daily close was above the 50-day EMA. So what does this tell me? Well, this tells me that, if we wanted to break lower, we would have probably already done so on Friday, and we didn't. So what I'm looking for in the gold markets is to see that bounce back towards the 200-day EMA, so back to that 1790 area. If we can get a break and a daily close above 1790, that's when we could potentially got towards 1830. That's going to offer a short-term roof in this market, and if we can break above that 1830 area, then I think we go straight towards 1900. Of course, we do have that new fib zone that we would have to break above, which is at 1875. But personally speaking, if we clear this B zone on this ABC correction, I think we go a lot higher, up towards 1920. Moving over to the Nasdaq100. Now, the Nasdaq100, I've still got my drawings there from Friday's video. Let me just clear them up quickly. But the Nasdaq100 was very bullish on Friday and last week overall. We set a brand new all-time high. And I did mention that I did buy off that uptrend. I cherry picked the bottom here for the Nasdaq100. I targeted the brand new all-time high, and that's exactly what we achieved last week. And I closed it, trade out in profit. Well done to everyone who managed to capitalize on that trade, who follows my YouTube videos and follows the signals. But the big question remains, where does the Nasdaq100 go next? Well, I'm still very bullish here, and I think we will go higher. I think 16,000 is the short-term target. One thing that I will say for the Nasdaq100 is that the RSI is just at 70 now, so that tells us that short-term we are overbought. So I'm not going to go ahead and buy the Nasdaq100 at these all-time highs. Do I think it could get to 1600 this week? Absolutely. I think, it's very likely that we will continue that upside movement towards 16,000, but the risk-reward ratio is not there for me. Look, you're basically taking a risk to gain 170 odd points, but on the flip side, if we went down to the 50-day EMA, where you got 500 points towards the downside. So you're risking 500 points to gain 150 points. It's not good risk management. So I'm going to wait for a pullback here in the Nasdaq100. But in the meantime, if Nasdaq100 continues to grind higher, that's absolutely fine. Patience is the key to being a successful trader, and that's exactly what I'm going to do. So I'm going to wait for that pullback towards that 50-day EMA, which is around that 15,300 to 15,200 area. And once we get that pullback, that's an area where I would be willing to add a significant amount of money to my Nasdaq100 trade here and trade it back towards the all-time highs. Moving over to the S&P500, the exact same thing. In fact, the S&P500 is a little bit higher with regards to achieving its brand new all-time high. We're up near 4,600. So we've had a fantastic bounce from those lower levels down at 4,300. Again, look at the RSI, guys. We're above, well, just below 70. I think we're currently trading at 69 on the RSI. Yeah, 68.74. So I want to wait for that pullback towards a 50-day EMA, which currently sits at around 4,500 to 4,400 area. If we get that pullback, that's an area where I will be willing to add a significant amount of money to my S&P 500 position and buy it back towards the all-time high. End of year target for the S&P 500, I think that we could see 4,800 pushing up towards 5,000. It's a big target, but I think it's actually achievable, especially now that we're going into this extremely bullish period of, extremely bullish period as we go into the end of the year for the stock market. Moving over to the crude oil markets, crude oil was trading rather flat last week, and I don't blame it. We've had that fantastic rally all the way from $62 a barrel all the way up to 85. And last week we chopped up and down, but ultimately we ended the week pretty much where we started, which was around $83 a barrel area. That allowed the RSI to correct itself, as you can see on your screens. RSI is currently trading at around 64, so we could see a move higher here for the crude oil markets. We could go and test the next level of this fib chart, which is up at $86. If we break above 86, I personally see us going to 90 very fast. I do have a price target up at $90 a barrel, and then my more medium to longer term price target is up at $100 a barrel. Energy prices are rising very rapidly across the globe, and I would not be surprised to see $100 crude oil before the end of the year, especially at this rate with this rally. But one thing I would say is that if we do become overbought again, look for that move down towards a 50-day EMA. That would be a fantastic buying opportunity, which is currently down at $78 a barrel. And I know it's a bit difficult to think that crude oil could potentially fall that far, but trust me, I've been trading for a very long time now, and it's very likely that a pullback down towards that 50-day EMA can occur. And in fact, it would actually be a healthy thing. It would allow more traders to get involved. It would allow the RSI to correct itself. And I think it just helps with that more medium-term rally towards the upside. Last but not least, the euro US dollar. What am I looking for? I have a buy position open, as I mentioned on that video I posted yesterday. I'm targeting up towards 1.17. I closed my previous trade in profit. For those who don't know, I bought down here at 1.16, and I was aiming towards the 50-day EMA. And if I just zoom in a little bit closer, we did achieve that 50-day EMA, and I've just gone ahead and added a new buy position because on Friday we had that massive wick towards the downside, and I've pretty much been able to add the exact same trade at the exact same price. So I'm bullish here for the euro US dollar. I think that we will snap back and recover Friday's losses. I'm going to keep it short and sweet. I don't want to disturb any more of your weekends. Enjoy the rest of your Sunday evening here before the markets open. As I mentioned at the start of this video, if you would like to receive my trades from a daily basis, more in-depth analysis, then please head over to my website, dailymarketmovements.com. That will take you to this website here, where you can then go and find out more about the service that I offer, and of course, subscribe. Thank you guys. Enjoy your weekend. If you haven't yet subscribed, please do so.